Good morning, everyone. I hope everybody had a good weekend. We are looking at some major changes since July 1st in our grain markets. We have China seeing diminishing ending stocks because they have outpaced their production for the last several years now, and their supply is coming down. We have a weather forecast for South America that for several months shows below normal precipitation being forecasted for the majority of Brazil's crop and way above normal precipitation for southern Brazil and Argentina, which could give issues on both sides of that coin. Too wet down south and way too dry in the upper two-thirds of Brazil. We have France that burned up along with most of the European Union. We have an increase in attacks between Russia and Ukraine, with Russia particularly focusing on bombing grain routes out of the Ukraine. If you remember back to 2020-21, this is what led to our big rally, was not moving grain out of the Ukraine. So there's a lot of positive factors for prices that have changed over the last month and a half. We've been slightly hedged over the last month and a half. We haven't made any new sales in corn and only a 15% sale on soybeans. So you guys like to move stuff. Bottom line is that scenario being bearish is now changed long term. That doesn't mean the USDA and their very important August report on Wednesday are going to come out and say, oh, the world is bullish now and prices are going to go through the roof. That doesn't say that at all. It says long-term fundamentals, there's a ton of risk to the upside. I see by spring the best prices for corn and soybeans that we have seen in over 3 years. So we're going to start to prepare for that, okay? Again, it doesn't mean the next 2 or 3 weeks with the glut of corn coming to market that we won't go down short term. So we have to put on positions that are good enough to withstand that short-term move down if the USDA kicks the can down the proverbial road, right? They may not change things and see the damage done in the U.S. crop or the supply issue that we're going to have with better demand for months to come. Who knows with the USDA, right? But I can tell you this, we have the best August corn export demand that we have seen in a long time right now. And it's not going down, it's coming up. That tells me the smart money commercials are buying ahead, even with the Safina crop coming to market right now, competing with ours, and even with our 2 billion bushel ending stock. I would be shocked if the USDA doesn't cut old crop ending stock corn and maybe even beans, okay? Bottom line is this is a long-term bullish outlook for you guys. I hope you all grow a big crop and we can sell at a good price. We got lots of sales ahead of us. I'm looking to get safely long in the accounts by making some adjustments to our hedge. That's where we are right now. This is why this market is not static. It's fluid. The changes between July 1st and now are significant. If you don't react to that change, you're going to fall behind the 8 ball. We're ready for it. We'll be calling you. Have a great week and look forward to better prices. Thank you.